This is Gerardo Del Real with Resource Stock Digest. Joining me today is the president of Global Market Development and one of the most experienced and successful contrarian investors in the resource space, someone I'm lucky enough to call a friend, Mr. Jeff Phillips. Jeff, how are you today?
I'm good, Gerardo. Thank you for having me.
It's great to have you back on. Thank you for taking the time, Jeff. The last time you and I spoke, I believe, was mid-March. And, COVID-19, we were just starting to learn about it in more detail. I don't believe anybody could have foreseen, or very few people could have foreseen, the economic impact that COVID-19 has had, put aside the toll on human lives and society as a whole. But a lot has changed since then, specifically in the precious metal space. You and I talked about navigating out of a bear market last time, and now it appears that we are on the cusp or in the midst of what I think is going to be a historic gold bull market. So I'd love to get your take on the difference between navigating that and approaching this cautiously for people that are less experienced than you, which is most of the world.
Yeah, there's a lot of questions there, Gerardo. I guess I'll start with what some people have been asking me, like, is this a bull market? And obviously, I actually think we've been in the bottom of the resource market was put in 2016. And typically when you look back, the market reaches a bottom and then, for a number of years kind of doesn't do much or goes up a little bit and retests that bottom. But so, as I've told you before personally, I think we've seen the bottom. Into 2016, we'd had a 5-year bear market. It doesn't mean everything's rosy coming out, but, you kind of know you're in that time frame when you keep buying stocks thinking that you've seen the bottom and you end up with more and more stocks. And as a contrarian, I always joke that you start to feel sick. And when you're really feeling sick about buying the quality companies, if you've done your research, it's usually time for the bull market to start, but you always question yourself. So that's sort of what goes on in these markets. To give you an idea, I've been around for, when I first came into the resource business, I've had, in that time frame, I've had 3, and now I believe this is the 4th time that the resource market turns from being a bearish market to a bubble market. And it's always fun to be in a bubble market before it starts. So I think that's what's happening now again. In the previous 3 times that's happened, I've made the biggest percentages wins. Obviously, as I've gotten older, there's more money involved. But when I first came in the business, it was 94. And from 94 to 97 was a tremendously fun natural resource bull market. I mean, and that was because gold had gone to $400 an ounce. But I mean, there were 1,000% winners, whether it was Francisco Gold or Arequipa, there's just lots of different things in that time frame. That preceded the 92 recession, and the lowering of interest rates and obviously what I call a market disruption. The next time the resource market saw huge, 1,000% winners and almost, anybody could have picked a resource stock and made a few 100% was from, roughly, I came back in late 2003, I think the market had probably bottomed in '01, but similar to what it's done this last time. It takes a few years to of people being scared that they're wrong on the bottom. But by 2003 to 2007, you saw, again, a tremendous opportunity in the resource space. We went from ridiculously undervalued prices to ridiculously overvalued prices. That was after the internet crash or the NASDAQ crash back in 2000, right?
Absolutely.
So the next time, we saw that was 2009 to 2011, and there really wasn't a cooling off period there. We had a couple years of, we had tons of opportunity to buy lots of stuff because it really, '08, you had the financial crisis, and then '09 and 10 and into 11, you had a tremendous, you had the rare earth boom, you had gold stocks up thousands of percent that, again, weren't necessarily quality companies. They made a full round trip. But that was after the real estate crisis. So I've seen 3 times where we've had major market disruptions where the natural resource stocks led by gold tend to go from extremely undervalued to extremely overvalued. So I believe we're about to see we're seeing the beginning of the 4th time in my career where we've had the ultimate market disruption, which is ongoing, and the printing of money and the response probably, is more printing than all three of those other market disruptions and the lowering of interest rate. It's the nuclear option compared to those. So I believe you're, going to have a historic run. And so we're, you and I will be talking, whether it be 6 months from now or 12 months from now, and, debating whether it's worth buying something that already doubled now or tripled now, and it's up another fourfold. And, and the fact is you and I think it's completely overvalued, but it doubles again. So that's what I think we're heading into. But I don't, have a crystal ball. I do have experience, though, and that experience has shown after major market disruptions, I've done really well in the resource space.
Well, let's look back a bit. I mentioned that you and I chatted mid-March, and it was a different market, and you were very candid. You're quoted as saying that you're down at least 40% in gold positions that you initiated at the beginning of 2020. And I'm just curious. Here we are, some 5 months later. I imagine you don't have very many positions down 40% in the gold space right now. What do those look like?
Well, it wasn't 2020. It was my portfolio. I was pretty much out of the market till 2016. I had a few key positions. I always keep, key positions, but I started buying pretty heavily again in 2016. And, I tend to buy during tax loss selling a lot more because stuff's down, and especially in a market that's not good. So, I was down 40% from 2016. Some of those positions a couple positions, and I didn't have that many before that, were probably down more than that from 2011. But I was down on, a large portion of my portfolio, 40% from, 2016 into the COVID crash, or whatever you want to call it. Yeah, so that's kind of correct. So what was your question?
So my question is, what do those positions look like now, just 5 months later? Just for perspective, if someone out there is listening and they haven't been in the space and they haven't experienced the turn between a bear market and a bull market like the one that we have, what do those negative 40, negative 50% positions look like now?
Anywhere from the worst being up 50%, 5, so and that's the worst, to up 150%. So. Yeah, my fund looks, family fund, but it looks a lot different than it did in March.
With that being said, Jeff, moving forward, things will get overheated. There's already names out there that, frankly, I can't believe command the market caps that they're commanding right now. And there's other names, frankly, that just haven't participated yet. And knowing what you're doing makes a big difference in this space, especially early on. What would you caution someone that is coming into this space with, $10,000, $50,000, $100,000 and is looking to speculate, hoping to make, that 1,000% type return that a gold bull market is famous for delivering?
Oh, pretty simple. I tell your listeners that, all microcaps, but specifically mining stocks are like burning matches. If you hold them long enough, you will get burned.
Learn to take profits is what you're saying, Jeff.
No, I just, again, these are cycles that go through, and I think we're early in the cycle, but, there's all kinds of different ways, when you have a bull market, and I believe this is going to go on. There's going to be, all three of those markets I referenced when the resource market did really well, they, stocks doubled and tripled and then pulled back 40% and then doubled from there. So, again, you're going to have pullbacks. Nothing goes straight up, in my belief, I believe. But again, the way they're printing money, I don't know. Again, gold seems to be pretty excited, but again, I expect pullbacks. And but over the next couple of years, as the cracks become wider, I think gold has a good base to work from. So, yeah. But the main thing, Gerardo, is I tend to be in companies. Again, in these bull markets, you get every promoter and every story getting dusted off, just like you see any space, whether it be cannabis or cryptocurrency, and things tend to get even more overvalued than you and I picture being overvalued. So, right now, I kind of joke, but it's kind of true. If there's a private placement offered to you and the stock's 10 cents, it's got the word gold in it, you can probably go in that placement and make money as long as you get out, because most of these companies won't make the turn. When this market turns again and we see more production in different areas come online, more capital flows to the space, these companies tend to be back to the value of what they have in the ground, which is zero. So, but again, it doesn't mean you can't buy a 10-cent stock and sell it for $1 in the next 12 months. There'll be lots of those things. I tend to focus on companies that actually have an asset, an advanced asset. I look for companies, especially at the beginning here, that, maybe because of the bear market, their share structures got out of whack. They need to be restructured, or, I look for companies that I've been involved with since 2016 and before. These are companies that have gone from discoveries to bankable feasibility studies. The numbers look like these are mines. So those companies are going to get taken out in this cycle. There's always a number of companies that get taken out, and that even excites the crowd even more, and the promoters and the 50-cent stocks. But yeah, no, I think, you're going to see stocks go way up. You're going to see stocks that, my economic geologist that worked for me or anyone else will tell you that's never going to be a deposit. The stock can still go from 50 cents to $8 because there's a lot of ounces there. So again, you can make money speculating at the right point in this market, but just remember, at the end of the day, it runs in cycles, and everything will come back down. So I'm really focused on companies that I think can be bought out in this cycle. So.
There's
but
two.
But again,
go ahead.
I'm going on and on. I do speculate on cheap stocks that again, I would never mention in an interview, or I would never offer my, financial consulting advice to. I consult for a number of companies. These have to be companies I think that are going to get taken out. I play the market and invest in placements and companies and give them advice, but I'd never attach my name to it, because at the end of the day, however long this lasts, they may go a lot higher. They're not going to be able to cash out because they don't have an asset that's ready to go into production.
Well said. You were generous enough the last time we spoke to share two names, and just for reference here, Midas Gold was trading at in the mid 50s level. That's currently trading at $1.50. So that's nearly tripled since then. The second name that you shared back in March was Almaden Minerals. It was 37 cents Canadian at the time. It's trading at 92 cents here 5 months later. How do you feel about each of those companies, and what else do you like out there, Jeff?
Again, both those companies have assets that are very advanced. Midas is in the final permitting stage, and now they're heading into a gold bull market with a 6 million ounce deposit. It's been delayed for, I always laugh when someone says, "Oh, doesn't that company have permitting problems?" I've never seen a company that doesn't have permitting problems in any country, including the United States. Everything takes longer. So Midas was supposed to have the decisions from the Forest Service and the U.S. government so that people can make comments on that out, a year and a half ago, and it's just taken longer. And, they finally got their act together, not Midas, the government, and now it appears they're on track, and that's going to be released here in August. And it starts the countdown to being issued the permit, and I believe they will be issued the permit. So Midas is a company, if you've interviewed me, I've said, I'm very certain that it gets bought out by a major, because it makes a meaningful difference, and it's probably going to happen when we have a permit. The only thing I can't tell you is what price that's going to be at. And if you talked to me in 2016, it's the same thing. I could have said, buy it. I've been buying that stock at $50, $60, $80, $90, off and on since 2016. So, but again, what it really comes down to is I believe it's going to get bought out. If I didn't believe gold was going to $1,000 an ounce, but obviously the economics of the deposit get less, and if it gets bought out for 40 cents a share, well, I lost money. I was betting on the price of gold being somewhat higher, not this high, and them having a permit at the same time, and I'd make money on my position. So in this market, it's highly leveraged to the price of gold. The permitting is finally, the countdown, but the official countdown will begin in August, and I think they're, it's good timing for people who just became shareholders. Again, the company's had to suffer through a bear market, and not a great market for the last 8 years, even if it did end in 2016. So, but again, for new shareholders, I think, Midas offers tremendous leverage, with that permit as a buyout candidate. Same thing goes with Almaden, and they've had some issues getting their permit issued on time. They were very close, and then Mexico basically suspended all permitting, mainly because there's court cases in Mexico, nothing to do necessarily with mining, but, a bunch of NGOs, and really backed by U.S. interests, which is funny, that are suing the Mexican government on behalf of the local people, or I don't have the right term, but the
local ejido, correct? The nearby community surrounding.
Yeah. Basically, so it slowed the permitting process down. But in Almaden's case, there's a company that, in 2011, the last bull market, made this discovery, and everybody, tremendous drill results. No one knew what it was, and was hoping it was a multi-million ounce discovery. And the stock went from 80 cents to $5 a share in the space of, you'd have to look it up, maybe 6 to 9 months.
Correct.
On a number of good drill holes. You have a company trading at the same share price today, or thereabouts, and now it's a 4.5 million ounce global resource with a bankable feasibility study focused on 2.5 million of those ounces, and I don't have the numbers in front of me. You have to have, your listeners would have to look it up. It's traded on the U.S. exchange under AAU. But if you look it up, I believe that their base case, which is like 1350 gold or something like that. And you correct me if I'm wrong. You probably know those numbers better than I do. But essentially, you've got a deposit that even at their best case, which was gold nowhere near where it's at, was close to a $500 million NPV. They have a $75 million plant they already own to put that into production, and they're just waiting for the permit. I don't believe Almaden ever puts this mine into production. I think there's already probably interest out there, but the largest shareholder on Almaden is Ernesto Echeverria, who's a Mexican billionaire, and he has no interest in selling the company at these prices. He obviously wants to see them get the permit. I think he has considerable influence in Mexico. So, yeah, I still like Almaden at these prices. It hasn't gone up as much as some of these other companies, even though it's got a tremendous asset, and that's because there were some people, because of tax reasons, that had to sell the position. But I think that's going to change, and I think Almaden is one of those companies that gets bought out. So.
And just going back briefly here to quote those numbers, they use $12.75 an ounce gold and $17 an ounce silver, and even in that scenario, the net present value is just over 400 million Canadian. And again, the current market cap is less than 100 million Canadian. And they have, as you mentioned, a mint condition mill that, in a bull market like the one we're in, can easily justify the entire market cap of the company. If you want to get a bit more creative, and I will, if you use $14.25 gold and $20 silver, the net present value rockets to over 600 million Canadian, or over $6 per share. So again, that's the type of leverage that I think you were speaking to.
Absolutely. And just so we're clear, I own a lot of shares in both those companies. I'm a consultant for those companies, as far as I really like to make sure companies I and other people I know own a lot of shares and aren't wasting shareholder money and raising money at less dilutive prices for their shareholders and not making mistakes. So again, I do consult for those companies, but I'm even more so, I'm a very large shareholder in both. And I don't plan, those are companies I believe are going to get bought out. Like I said, I own lots of other companies and I have other companies like that I own positions in, but I have other companies that, when the stock's up 500%, I'll be a seller, because it's not going to be bought out. It's part of this, what I see coming, which is a bubble market in the precious metal space.
Both those companies, Jeff, already have, a robust resource base, top-notch deposits, top-tier management teams. Are there earlier stage companies that you see could turn into an Almaden or a Midas that, finally have a bull market that allows the company to frankly raise the money needed to do the exploration to find a quality deposit, which are getting, harder and harder to find by the day?
Yeah, that's a difficult question also. Yes, absolutely. There's quite a few companies, and you can't buy everything. So there's a number of good companies out there that I think can take where they're at and end up, they're definitely going to be able to raise capital at higher and higher prices and advance those deposits quickly. The real question is, a lot of these companies go through multiple cycles, even the best management teams, and often go through 2 cycles before they sell their asset. I always remember Mine Finders, because, I worked with it, and Metallica Resources back in 95, and owned shares in those companies. They eventually went on to both be bought out, but it was in the next cycle, 2003 to 2007. So their share prices, Silver Standard Resources, which is now SSR Mining, that was actually a client of mine in the mid 90s, when the stock went from, I don't even remember, let's call it $3, or, originally went from 75 cents to $5.
Mm-hmm.
It even went higher. But then in the bear market, I think I bought that stock back for $3 in 2003. And it put the assets together, but obviously the bear market between 97 and 2003 had taken its toll, like on all these companies like Midas and Almaden. But Silver Standard went on. I purchased it again at 3 or 4, and I think even at 5, and it went to $35 in 2007. And I don't know what SSR Mining is trading at, but I bet you it's doing really well right now.
$24 US.
Yeah, there you go. So again, it was probably lower. So then that's a company that took some assets that put a bunch of silver assets together when no one wanted them and actually built mines and is now a producer. So again, there's lots of companies, more, and a few that I own that I think, have assets that they can advance. And again, you don't have to get as far as like a Midas and Allman to a bankable feasibility study and permitting. In a bull market, companies get taken out at earlier stages. So it can be a pre-feasibility study, or in some cases, even a PEA, if, it looks very, very robust. Because remember, all of these one mine producers and bigger companies, their share prices and cash flow are going through the roof right now. If you're producing gold at, you're making a lot more money at $2,000 gold than you were at $1,200. So they'll buy earlier stage stuff. So again, you don't have to be as advanced. So there are companies that will make it in this cycle and get bought out because these larger companies are going to be handed tons of cash, and like they always do, and then they begin to overpay at the end of the bull market, and that's the time that you're to get rid of your burning matches.
Well put. Jeff, I've taken 20 minutes of your time. I want to thank you for that. Is there anything else that you'd like to add out there? Something for people to look out for in this market? You mentioned that a lot of money will be made. Prices will go higher. We've talked management teams in the past, how to vet a share structure. People can always reach out if they have any questions on my end of it. But any words of wisdom here before I let you go?
Yeah, you asked me to give you a couple names of companies. What I suggest is, I can tell you a couple of earlier stage companies I like in this market. They have moved up, and why I like them. But why don't we do a part 2 of this interview at some point?
I would absolutely love that. Maybe you come back next week and see if we have $2,000 gold here in the U.S.
That sounds good.
Perfect. Thanks a bunch.
Thank you.